Today we're going to talk about how we're going to adapt to macro shocks using relative strength. Again, relative strength being one of the most commonly used and commonly sought after analysis of the market. And we're going to talk about how we adapt this concept. Relative strength is something that can be used in a handful of ways. We're going to go over those and traditionally and prove to you why and how they work. But then from there, we're going to talk about how we can reinvent this topic, how we can take something that we know works and change it up. And as always, at the end, I'll be showing you some of the cool stuff that we're doing over at Trade Ideas. But my goal with these presentations are always to first educate, give you guys something to take home, whether or not you're interested in checking us out at Trade Ideas. And then after that, if you want to make your life a little bit easier, a lot of the concepts that I cover will be talked about. I have the chat open here, and then I also have the questions open as well. So feel free to chat as we go. Okay. So first, who am I? Who's talking to you today? So a lot of, I already had that great introduction right off the bat, so I won't go over everything. But my name is Michael Nauss. I'm a chartered market technician, which for people who don't know, essentially the CFA. A lot of people know the CFA, but focused on technical analysis as opposed to fundamental analysis. So yeah, I started trading in university. I started trading firm money there. They had a little job fair where they were recruiting mostly video game players to trade in the prop firm. So this was before the age of HFTs, when in fact these prop firms were the HFTs. So that's kind of where I started. After that, I worked in 10 years in the hedge fund space. This was around the Bernie Madoff time, which if people don't know about that, I keep forgetting how old I am, but if you weren't living in that time, definitely check out that Netflix documentary on Bernie Madoff. It was really, really well done on a way to summarize what happened there. But long story short, nobody trusted each other in the industry for a long period of time. So there was a lot of demand for firms like mine who would check out what hedge funds were doing. Now, for me, this was awesome because my job was essentially to go into a hedge fund and speak with their portfolio manager and their traders and figure out how they were trading and what the risks of their trading style would be, which was a great way to fast track being exposed to a whole bunch of different trading styles and philosophies. After that, I have my Kaya, which is an alternative investments designation, which we won't really talk too much about, and my CMT. I have a little website called Stats Edge Trading where I essentially just share my thoughts on the market completely for free if you want to check that out. And there's just my Twitter handle. This is also, I have the speaker notes over on the other monitor I almost missed. It's also where I talk about Trade Ideas as a software provider, right? We are not an investment advisor. I know I've been watching a lot of these presentations. You'll get this kind of stuff a lot, but the legal team gets mad if we don't say it, right? Past performance isn't indicative of future. We sell kind of the picks and the shovels. We sell the software that will allow you to be a better trader. We do not provide investment advice. But okay, so before we talk about redefining relative strength, we first have to define relative strength and talk about what we're talking about. And I'm going to prove to you mathematically with studies as a quant, that's something that I love to do, that this actually works and why it actually works. So relative strength, simply put, is a performance of a asset to a benchmark or an asset to another asset. We will talk about the RSI indicator and how we're going to use that, but just note that this is not about the RSI indicator. This is about this concept of relative strength. And I have some charts to kind of show this. So the top one here, this is ELF, which is a makeup beauty supplier. And then the bottom is the S&P 500. The dark line is ELF. The pink line is the S&P 500. So quite obvious, right? You don't need to be a CMT to say, hey, at any point in the last handful of years, it would have been better off to be owning ELF as to own the S&P 500. The S&P 500, 20% up. I think this was from the beginning of 2021 I did this, and then 430% in ELF. So just comparing those two things. This next one is, what if you don't want to compare something to a benchmark, but you want to compare it to its competitors inside the same space? We have Lilly as the dark line and Pfizer as the pink line. Eli Lilly is doing part of that whole Ozempic thing, which is obviously taking off for them. Pfizer, not so much, down 31%, where Eli Lilly is up 100. So the idea is that we are comparing one asset to another. Now, why would we want to do that? And do we have any proof that this concept works? So, as mentioned in my intro, I am a quantitative style trader where most people will take fundamental analysis and then they'll take technical analysis and they'll combine those two things. So for example, I don't know, let's use Eli Lilly for example. I think this Ozempic is going to be a big thing. It's going to change the world. I actually read an article that it was bullish for airlines because the planes would be lighter if everyone lost so much weight. But whatever fundamental reason you have, as a technician, I hope then you're then backing that up with technicals. You're saying, okay, that makes sense. I like this fundamental, whether it's AI, whether it's Ozempic, whatever it is, that I am backing that up with some sort of technical analysis I'm going to only buy this thing when it's in an uptrend or when it breaks out or whatever have you. Now, I am a quantitative / technical analyst. So I look at the quantitative side. I say, okay, prove to me that a concept works in the market over time, and then I will apply my technical analysis thinking to that. So I'm going to go over a couple studies real quick. I don't want to go over time here, so I'm going to go quickly through these. But I'm just going to leave these up for a second. If you want to look up Jadish in 1993 or the Black Star study in 2005 or Medfaber in 2010. These are just three of the studies I pulled out proving this concept of relative strength, beating the market in the long run. So first is Jadish, who took 1965 to 1989, and that's when the study was done. That's why I stopped in 1989, and simply said, what if I only take the top performers from the last 6 months, and then I hold them for 6 months, and then repeat. That was his entire investment philosophy and concept when coming up with this study. Noticed a 12% year over year increase, simply buying whatever worked and balancing a portfolio into whatever worked over the last 6 months, and then applying them to the next 6 months, and so on and so forth. The next study here from Black Star Funds basically just said, what if I go even simpler, and as opposed to ranking things by performance, I just bought stocks as they hit new 52-week highs. This is basically showing the percentage of names that were that made money buying new 52-week highs and putting on a really wide trailing stop. Everything on this side would have been making money. Everything on the other side would have been losing money. But then they just built a portfolio with it over this period of time, which was 1991 to 2005. Said, okay, we're only going to buy things that are breaking new 52-week highs. We are going to then put a 10 ATR trailing stop on them, and we're going to build a portfolio based off of that, with the blue line being the Black Star Funds and the pink line being the S&P 500. Again, showing this concept of relatively strong names, right? Not everything is hitting a new 52-week high, so anything that is going to be relatively strong to anything that is not. Just focusing on those as opposed to the buy low, sell high that a lot of people have been taught really outperforms the overall market. Next one, and this might be one of my favorites. This is from Meb Faber, who basically just took the top ETFs and said top industries and said, I'm going to look at whatever industry performed best last year, and I'm going to put my portfolio into it this year, and I'm going to repeat that process year over year. Now, with the top performing ETF, that's the light green line. If you balance into the top two, you had the blue line, which returned a little bit less, but actually had better risk-adjusted returns. And same with the red line, that was the top three, performed a little bit less, but had better risk-adjusted returns. And then buy and hold of the S&P 500 in the dark blue line. And this is from 1928 till 2009. So I really like this because that is a whole lot of data, and B, shows that outperformance persists. Buying stuff that is stronger than the overall market and stronger than its peers works. And there's 3 studies to prove it. There is a litany of others. Those are just the 3 that I thought made kind of the best point. Now, why? Why does this concept work? Why would it make sense to buy stuff that's already gone up as opposed to every value investor's book of buy low, sell high? First concept, I think this is just speculation. We'll never know why anything actually works in the market. Anyone who tells you they do, they're making up the story after the fact. But the main thing is that you don't pay income tax if you don't have income. So if you are, say you're a portfolio manager, you have two securities. We'll use the Eli Lilly and the Pfizer, for example. So you bought both those at the same time. The year end is coming along, or you just have to free up money for redemptions, or you have to free up money for another trading idea you have, and you have to sell something in the pharmaceutical space. Well, am I going to sell Pfizer and actually claim that tax loss, or am I going to sell Lilly and pay a whole bunch in tax gains? It makes sense that you sell whatever stock is not working, and as it's kind of like the government is trying to get us to trade correctly, we know that's what we should be doing anyway. Anything that's not doing well, it's time to get rid of, replace with something that has the potential of doing well. That's one reason I think so. The other reason I think is window dressing, where it's basically the concept is that imagine right now if you have to do a presentation and you're a portfolio manager to your investors and you don't have any Ozempic stocks and any AI stocks. Even if you believe the evaluation on these things is incredibly stressed, you will be berated by your investors that all have heard that AI and Ozempic, these things are going to change the world. It's going to be crazy. You need to make sure that you're investing in these names. So that's the idea of window dressing, is that, hey, if I put some NVIDIA in the portfolio, even if I don't like it too much, oh well, I have to put it in there because then I can tell my investors, hey, we are invested in NVIDIA. We are ready to go for the AI craze. So that's that phase. Now, this part of it, before we redefine relative strength, is just talking about how these work really well in macro shock type environments. And which is very important because any trading strategy will work well when things are trending and when things are normal. We want something that actually does very good job of withstanding these once in 100-year events. As someone who's 36 years old, and over the last handful of years, I have heard once in 100-year event many, many times over the last few years. So we're definitely getting a lot of these. Here's a monthly chart of the S&P 500. We have 3 boxes on this chart, and we are going to basically highlight these as this box right here. We're going to call this the interest rate scare, where this was when Trump and J-Pow were fighting on Twitter and raising interest rates and lowering interest rates. I remember it had made this awful Christmas where the market had just kind of fell apart in Christmas and then came back in the New Year's. We all know what happened in 2020, which was the pandemic, and then we're going to call this kind of the Russia-Ukraine, which kicked off the bear market, which was then led by interest rates and all this kind of stuff. So this is what you would have to know if you were a fundamental style trader and you didn't want to look at the concept of relative strength, you just wanted to look at fundamentals. You had to understand during the 2018-2019 bear market, which that the president would yell at the chairman to change interest rates, that they would change interest rates, and what stocks would have done well in that period of time. You got to know a lot there. Then in the COVID crash, you need to basically just forget all of that information. You need to become a virologist now. You need to understand how a government's going to react to a pandemic. You need to understand the economic impacts of how a government would react to a pandemic. Again, you got to know a lot of stuff. And then forget all that, and you got to be a geopolitics expert right after that. So you basically have to be this guy. And nobody likes this guy. We've all seen this guy on Twitter. No one's a fan of this guy who just, I know everything. A thing has happened. Let me now put in my input on this thing, even though I don't know this stuff now. The beauty of that is we don't actually have to do that. We can use this concept of relative strength in order to make sure that we don't have to be these people, that we can just say, hey, we know relative strength works. Let's focus on that during these kind of trying times that seem to happen over and over and over again. And let's see what happens. So first we have to define strength, which we've already done. We have to assign some score and say, hey, I'm going to do it by, we talked about the new 52-week highs. We talked about ranking things by how well they did over the last 6 months or how well they did over the last 12 months. We're going to assign some value to what we've defined as strength. We're going to then find the strongest stocks and take trades. Right, so the first way to define strength we talked about was this absolute price move, which is just saying, I want the stuff that is up the most in the last year. Well, here is more evidence that something like this will work if you don't have enough already. The blue line, or the green line, sorry, is essentially saying, I am buying stocks that are going to, sorry, I took the S&P 500, I picked the top 10 names of the S&P 500 based on how well they did over the last year. Just absolute performance, as we talked about. How much was the stock up? Buy me the top 10 of those stocks. The red line is the S&P 500. He had a 6% higher year-over-year return, and you had a 6% higher drawdown. The other way, which we talked about on the entrance here, is this using indicators. So we talked about this RSI and how we know that, if you attended the last one that I like to talk about here, we know that buying stocks as the RSI gets oversold is not the move. Buying stocks that refuse to get oversold, that's going to be the move, right? So Dell here was an example that I just pulled out, where you can see this nice trend that occurred in Dell, and you notice that every time it pulled back, that RSI was unable to get oversold for a period of time, and you get this nice trend. Dell is actually still looking nice even after I made this presentation. So I did the same thing. Now, these are very rough back tests, again, just to prove the concept, and said, okay, we're just going to buy stocks and we're going to rank them based off how long they've been unable to get oversold, and we're going to buy those S&P 500 names. We're going to compare that to the S&P 500. You can see a good year-over-year gain and then a little bit of an increased drawdown, right? This one's not the best. Now, this one is one we're going to talk about as well, where we're going to take position in range. We are going to ignore absolute performance, and we're going to ignore indicators for this one. We are going to talk about position and range. Don't worry. All this will be coming together and make perfect sense in a second. Position and range is basically saying what is the high of the range and what is the low of the range, and we're just going to make those percentages. So here in this picture of the SPY, the low of that range is 0%. The high of that range is 100%. This normalizes for absolute gain, which we talked about before. Yes, does work, but it could have some problems. What if you're rolling over and you're buying AMC or Bed Bath & Beyond because for a second there it had the highest absolute gain? Issue being there, those things have crashed and probably are never coming back. Bed Bath & Beyond most certainly never coming back. So absolute return can actually affect based off of price. It can affect based off of how liquid the security is, a lot of these things. Whereas stocks just holding into the high end of their 52-week range, we know is going to be a good thing, because this is, again, that simple back test. We had taken the S&P 500 at the end of the year. I rank it by, or end of the month. I rotated these monthly and said, here are the top 10 stocks based off how high they are up in their position and range. Buy those 10 next month, repeat. 5% year-over-year gain. Again, these studies are going back to 1980. So 5 years before I was born, all the way up until, I think, a month ago, I ran this. So 5% average gain, 5% less of a max drawdown. You can see holding the S&P 500 from 1980, putting $1 in the S&P 500 is worth about $32 now. Putting $1 in this strategy and rotating it and compounding as it comes turns into $256. So a much better return. Again, I'm not doing any fundamental analysis. I'm not doing all that where I understand virology and all this stuff. I'm just saying, hey, what's the strongest stuff out there, and how can we define what is the strongest stuff? And I'm just going to put my portfolio there as opposed to anything else. So what happens when we slap it all together? We look at all of these periods of time and we build a system. Well, that's one of the things on top of many things that we did over at Trade Ideas. During the interest rate scare, you can see here, this is the chart that just shows the distribution of what that security or what that portfolio was in at that time. And again, no crazy AI stuff that knew that this was an interest rate scare and there was battling going on back and forth. 26% in utilities and 26% in manufacturing. So nearly over half of the portfolio is in staples type stuff that does very, very well over that period of time. During the global pandemic, we had 28% in pharmaceutical manufacturing companies. Again, it doesn't know that there's a pandemic going on. All it knows is that when the market is selling off, the market is not selling off pharmaceutical companies, which makes perfect sense. So how do we do this? Again, I want to teach, and then I'll show you guys the system after that. So how do we do this? We basically took all of the concepts that I've talked about before and we put them together. We took the position, the value of the position in range. We took the length that the RSI was not able to get oversold. We ranked by absolute return. We put in a whole bunch of indicators like, is it above the 200-day moving average? Give it a couple points. Is it above the 50-day moving average? Give it a couple points. And then we rank every stock in the market by this system that we created, which updates every 30 seconds. Now, you could do this yourself if you wanted to assign these values and build them out and run that. One of the advantages we have at Trade Ideas is server tech, right? So we're able to refresh this constantly, and I'll show you some of these symbols that are in there right now and show you it refreshing live. So this is one way that we're able to build these out, right? Without saying I want a stock that's uptrending and trying to figure out all the stuff, all the crazy indicator behind that. We can just push these together and find stocks like this that are close to the high end of their position range, great yearly return, and RSI not oversold. Again, going back to the evidence that I gave before, that statistically speaking, it's better to at least be looking at these ones than anything else, right? So how would you use this? Everything I've talked about before is portfolio rotation. Is you just, pick the top whatever ranking mechanism, you just put your money in that and you just rotate that portfolio daily, weekly, monthly. That's totally fine. For people who want a really hands-off approach, there's nothing wrong with that. And in fact, that's how we back tested this system, which as of the end of June, I update these quarterly, so I actually have to, I'm in a bit of trouble because I'm a bit late on that. But as of the end of June, it was 25% return this year. The S&P 500 was up around 15 at that time. I would bet both of these have come down a little bit. The hope is TI Swing Picks or TI Strength has come down less than the overall market as a long-only system. And this is a chart of the same system from 2018 to that same period of time. You can see, again, not a perfect system. If anyone comes and shows you a perfect system, they're absolutely wrong. But just by balancing, we're using no other criteria or ideas, or we're not even applying our own thinking to it. We're just rotating the system into that. Great relative outperformance to the overall market, making new equity highs, even when the market was struggling to get up to new highs there. Other way to do it, and this is more or less how I talked about in the beginning, how I trade, is stock selection. So we use this rank, and then we pick things. And we say, okay, if FLR is up there, it's a nice looking chart. Well, I'm just going to set a stop limit over these highs to try to catch a breakout and a continuation of these trends, using this as a way to focus. We have this go-no-go indicator, which we're talking about later, something we're building into Trade Ideas. You can apply other indicators or other styles, even if you have your own trading style. I implore you to take a relative strength approach to that trading style. Right? Bottom-up analysis. This is something, again, as a CMT, I use this for all of the time, where what I want to do is, as opposed to top-down analysis, which I do, which is looking at the overall market and then the sectors in the overall market and then the names inside those sectors, sometimes bottom-up analysis can actually tell you what's happening before the sectors does. If gold miners start to move before gold or before the market, that could tell you that there's some risk-off behavior happening. This, again, these rotations happened before the pandemic crash got crazy. It started to allocate more into pharmaceutical manufacturing. So I may not have taken even the tickers that it was suggesting, but it gives me an idea where to look. Last but not least, this is day trading. So if you are a day trader, if you're an active day trader, we have the ability, and I'll show you that just 1 second here, to just rank all of the stocks by how much they're up from the open or from the close or in the last 30 minutes. and only show you guys the strongest stuff out there. That's another great way to go through and to make sure that you're only looking to buy the stuff that's doing the best. Again, for all the reasons that I showed you about why, please don't buy stocks that are hitting new lows unless you're a really old school Buffett value investor kind of thing. All right, so before we get into it, just thank you. Here's all the ways you can follow me. Basically, if you put Michael Nauss CMT into the internet, I have a Substack and Twitter and YouTube and all that stuff you can follow me at. Now, let's get in. Let's show you the products. Because again, I want to educate. Then I want to show you how we can make these concepts a little bit easier over at Trade Ideas. So first of all, if you go to, this is just tradeIdeas.com. Good thing to do. You can sign up for our test drive. We have a coming up on November 6th. So in 10 days from now, we have 2 weeks of the product for $11. You can play around. Basically, the $11 covers the data feeds because we buy data from a whole bunch of different places to build these systems for you. So you can try it out for 2 weeks, see if you like it, play around, ask questions. We have a trading room for free on our YouTube channel going 24, whenever the market's open. I was about to say 24/7, but that would make the trading room moderator mad. We're also having, if you're going to download our Windows product, for now, eventually this will be on the web as well, but we're having a paper trading competition. If you win, we'll just send you over Amazon gift cards. So give it a shot. So then if you click, be the first to catch the stock. My computer's chugging a little bit, but that's okay. You'll see this opening dashboard. And this is exactly what I was talking about, where now we are ranking all of the stocks by what's happened in the last 30 minutes. I apologize. I don't know if it's go to meeting. I don't know if I have to reset my computer, but everything's running a little bit slow for me. But yeah, so we have right here, I expect that to be an arrow. We have right here, change the biggest from the open, from the close. It's in the last 30 minutes. Let's see what's the biggest stock move from the open today. And we can rank these for you. We have a chart right here with some fundamental data all kind of set aside for you. You can actually try this right now for free with delayed data just by going to tradeIdeas.com. And as we can kind of click through these, you can see what's occurring here. But I'm going to go over to the other software just because this one's, again, my computer's just a little bit lagging right now. So FRBN, this massive move from the open. This looks like a de-SPACed company going live today. Things that are hitting new highs, things that are hitting new lows, all of that cool stuff we cover right away. But if we get into the software here, I just wanted to show you this ranking system. So what Trade Ideas does at its core is we are a scanning software. So we can scan for pretty much whatever it is that you want. If you want to build your own scans, if you want stocks that are pulling into their 200-day moving average, you can do that. If you want intraday 15-minute opening range breakouts on relatively strong stocks, you can build those in. So I just wanted to say, hey, there's a lot more that we can do that I'm going to show you, but we were talking about relative strength, so I'm going to focus a little bit on that. And as always, you guys can ask questions as they come. So I don't know if the new questions are on the top or on the bottom. I think they're on the bottom here. Anyone, the trading competition? Yeah, anyone, again, if you pay the $11, you can enter the trading competition. I can't enter because I work there, which is a shame because we've been having a lot of fun internally trading them and talking smack. So what you'll notice right now, and this was something interesting as I was scanning through, relative strength to me right now is way more important with what's happening in the market. If we go to the SPY, you can see the SPY is pulling back. Now, another way that I describe this relative strength concept, especially right now when the market's selling off, I love looking for in TI strength, which is the name of the system, for relatively strong names. Because the way this was described to me actually by a client a couple years ago, which I love, was essentially if you hold like a beach ball underwater, which would in this scenario be the market holding down stocks, it kind of builds up that pressure. And the same as if you can find stocks that are holding on well when the market is selling off, When that pressure gets alleviated and the market bounces, then the stocks that were relatively the strongest, in my experience and with all the data I showed you, have the ability to bounce the highest. So this is actually a perfect time for me to be scanning through here with you guys again as you ask questions. But again, so FTI has no idea this is a purely technical system, has no fundamental data at all, but it knows that, hey, energy is strong and this thing reported earnings and it's up 7% on the day the market's absolutely getting killed. So if you want it to just rotate your portfolio on a basis, this would be a pretty good candidate. If we zoom out here, we have this thing at Trade Ideas, which is called picture-in-picture charts. So this chart in the bottom is a monthly chart. This chart on the top is a daily chart. So I can see the long-term trend while I'm looking at the short-term trend. You can see the long-term trend is very strong in this FTI, and the short-term trend is very strong. From there, I just apply basic technical analysis. What I've learned from being a chartered market technician is that the people who do the really complex technicals and tons and tons of different indicators and different things they're looking at generally have a harder time than people are doing simple technicals. So this is actually a name that I'm watching now that earnings are out of the way. And if we can close above these recent highs right here, I think I'm going to get involved with a stop under 20. You don't need to make it complicated, but I would not have known anything about this name if it wasn't for this. IBM seems to be holding up well. Nice gap up on earnings. IBM still exists. That's funny. TAL, even though it's down on the day, you can see if you just look at this chart right here, and then we go look at the market, that comparison that I was talking about before really holds true, where the market is down and downtrending and even down today, even though TAL, which is I think a education company out of China, even though it's down a little bit today, this overall trend has been doing absolutely phenomenal on this. TW, TradeWeb, another one, had earnings this morning. Massive engulfing candle here. Really interesting look as we break out of these prior highs. So this may be another one to look at. You can see that we can put in price alerts, all kinds of stuff. Again, just the very, very basics of what Trade Ideas can do here. If we're looking at an iceberg, I'm just showing you the tip here. We also have this fundamental screen right here, which you can look at. Shows you can customize this. Let me show you everything that you can customize with Trade Ideas here. I'm going to start scrolling down. These are all of the filters that you can either add or remove from scans or from your charts or from these single stock windows, which is what we call these data windows. I'm continuously scrolling. We're about halfway through now. I'm going to grab just a drink real quick. Right, so tons and tons of customization if you really want to get into it. But we know there's some people who want to do that, and we know there's some people who don't, and that's why we have these kind of ready build systems for you. So I can learn a whole bunch about the stock just by looking at this right here. Big cash to debt ratio, has 60 times more cash than debt on hand with a market cap of $10 billion. It's a pretty big company. Short float, the actual float of the company, earnings per share, when earnings is, because if anyone's been caught in a bad earnings report, sometimes we want to avoid earnings. That's why we highlight it nice and red when it's within a couple days. Average daily volume. These are just the filters that I have currently. What's the debt of the company? How much cash does it have on hand? These type of things. You can go and read, because a lot of the idea behind Trade Ideas is we want to show you the stuff that not everyone's looking at. Everybody's looking at NVIDIA, Apple, Google, Meta, everyone's looking at the same basket of stock. Where trend following and breakout systems and relative strength systems really, really shine is looking in those areas that nobody is yet looking into. So I often spend a lot of time in here where I'm trying to figure out what this company does, because I'll be presented things like TW, which I don't really know anything about. So I can just read. They do something with credit, some sort of electronic marketplace for the trading of across rates, credit, money markets. So some sort of exchange type company. I can also just read the news if I want to know the news about it. We have the news filter just completely built in. Again, this is all part of the built-in Trade Ideas subscription. If I want to read more about the earnings, you can see all the data is right in there as well. And then also competitors. So say, for example, I really liked the look of this chart, but I didn't like this particular company for whatever reason. The setup wasn't right, or the fundamentals weren't right for me, or didn't have enough volume. But I kind of want to see what the other guys in the sector are doing. Well, if I go through here, you'll see other names that are going to be in this same sector. So right here, we have the actual NASDAQ, which makes sense because this is an exchange. We have the Intercontinental Exchange. We have the CME. So these are all competitors. And as I click through these, it updates my charts, and these are the competitors. CME looking really good here. Very strong recovery off earnings, holding up pretty high. So if you find a stock, sometimes the competitors are the way to go. Maybe, for example, you're interested in NVIDIA, but you think maybe the valuation's overdone there. Well, if you look at its competitors, you can quickly go through and scan its competitors and see maybe there's something that's valued something a little bit more interesting. Speaking of exchanges, looks like CBOE is in here as well. Very nice look on this one, but November 3rd for earnings. So that's a little bit close for me. On top of this, so say you didn't buy my presentation on relative strength. You're like, I'm not interested in that. I'm more of an indicator guy. Well, these are all the pre-built scans that we have for you. Now, again, you can customize to your heart's content, but we just don't have the time to go through that today. But for example, if you're a Bollinger Band person, we have Bollinger Band squeezes. These are ranking stocks by the tightest the Bollinger Bands have been in an entire year. For those who know about Bollinger Bands, they know they're essentially a volatility measure. How tight is the volatility versus how wide is the volatility? We compare all of the stocks in the universe of stocks, like every single stock that exists, and we say these are the list of stocks that the Bollinger Bands are the tightest they have been in the entire year. For people who trade Bollinger Bands, this is great because, hey, if you're looking for these things to potentially break out, you want consolidation to begin with. If you're someone who's interested more in, let's say, a MACD, we have names that these are doing bullish MACD crosses today, which, again, talk about relative strength. Anything putting in a bullish MACD cross today is definitely going to be a relatively strong company. We have Cleveland Cliffs, which is a good one, putting in and I can show you guys here. MACD. Right, plus charting, plus auto trading. You can send trades directly to interactive brokers and E-Trade. Let me actually just connect to our sim, because again, you can enter our simulated trading competition. The person who makes the most money over that 2-week test drive period is going to be sent $1,100. You can see we're doing some trading competitions here. Of course, we're all going crazy with it. So no, I'm not up $153,000 on this trade, but we're definitely trying to break the system as we get ready for you guys to come aboard. NXE. So this is putting, as of today, a bullish MACD cross, right, over, which is, again, relatively strong. Say you're not a MACD person. You just want to trade candlestick patterns. We have, let's just do the inside day. So these are all stocks doing an inside day today. We can rank them by volume. We can rank them by ATR, all types of different indicators. But again, scanning everything for you in real time as things go. My favorite, support and resistance. I'm a very old school trader. I don't use a lot of indicators, but hey, I just want to find stocks that are at support on their daily chart. Where are they? At support, daily short term. And this just uses a simple algorithm to detect what is support and what is resistance. And we're going to find stocks that are at that support area. So Adobe is coming into support. You can see it right here, a little bit from there, but it's getting close to that zone. PCAR, right, pulling into support, a little bit far away from that as well, but getting close. We can go in and do Anchored View app. If anyone's a fan of Brian Shannon, which I am, we actually built this product in conjunction with him that will not only show you stocks that are pulling into major Anchored View apps, but as you can see here, it draws them for you based off what you've clicked on. So UUUU, which is a uranium play, uranium's been on fire recently, is pulling back into an Anchored View app. And as I click on these names, you can see they're being drawn in for me here. This INOS came into this anchored VWAP right here and is now bouncing off of them. So a lot of what we're doing is we're trying to build in popular trading and popular scanning techniques for whatever it is that you look for as a trader, and then we're trying to help you along there. So if you're looking for relative strength, I did a whole presentation to show you that. We were talking about earlier, as I came in, about the RSI and how buying stocks in which the RSI is unable to get oversold is a good move. So let's just put on, I know I got 3 minutes left, so we'll do this quickly. We're going to remove this, and we're going to add in the RSI. So what you'll notice with these stocks is the RSI has been unable to get under 30 for a long period of time. So as I click through these, let's go and grab just one at random, LPG. You can see the RSI, even at its low here, was, as it pulled back, was unable to get under 30. These are just going to naturally give you nice, strong, uptrending stocks. Again, earnings a little bit in the way for this one, but as we click through, you can see, and then there's SIBO. It makes sense, right? Part of the algorithm is looking for these RSIs, the redefining strength to make sure that for a long period of time, the RSI hasn't even been able to get under 30. Not even way back here when it was at its lowest. Massive strong trend in that one, but earnings is definitely in our way. So I think I've showed you guys enough. I may actually end a few minutes early. I'm just going to open up for questions.